Yep, we have a couple more board members joining, and Mr. Hoffman is connecting. Andrew will be recording the session, just so everyone is in the room is aware of that. I just want to make sure, okay, Mr. Hoffman's on, so he also would hear then that this is going to be recorded. And we do have Krista Gardner from, help me remember the name of your organization.
Well, there's a story behind that, but it's now SEK.
Okay. Okay, so she's also in the room along with our usual folks here. Okay, so the first item on the agenda that Andrew is just sharing, let me go back to that.
Thank you, Carrie. If you don't mind, I'm just going to have a quick introduction for some of the board members. Krista Gardner has been the Gettysburg School District's auditor for nearly 13 years. She formerly was with Stanball Ness, and we've had them for numbers of years, conducted the audits and so forth. And just recently, she is now partner to SEK, which SEK is Smith & Kearns & Company. And they bought out the governmental finance division of Stanball Ness. So Krista was able to bring some of her folks over with her, and we are very fortunate to have her continue doing the audit for us. So if she wants to share anything more as to what will change or what will be anything different, I'll open the floor up to her, as well as to give her the opportunity to explain how our audit went for June 30th of 2020.
Sure. Yes. Hi, everyone. I know some of you I've met in past years. So as Belinda said, I've been working with the district for quite a number of years. Actually, the district's audit was one of the first things I worked on when I started as a brand new staff at Stanball Ness many years ago. And then obviously I've worked my way up. I've been a partner on the district's audit for probably the past 4 years now. So I was a partner at Stanball Ness. My title there was Managing Director of Government Not-for-Profit. Stanball Ness made the decision to remove itself from the government and not-for-profit space. That was a decision that they decided to make. I was the only partner there that worked in the government not-for-profit space. So kind of a one-woman show with my team there. So thankfully, although Stanball Ness made that decision, really the ball was put in my court as far as what I wanted to do with my practice. So I was thankful for that, because I wanted to make sure where I ended up not only was a good fit for me and my team. I love what I do, they love what they do, but also for my clients. So I approached SEK. I had some familiarity with them, very well-known, respected, great footprint in the government not-for-profit world, local here still. So thankfully they welcomed me with open arms. So I really just picked up my entire practice and moved over to SEK, where now I'm one of like 9 partners that are in that government not-for-profit space. So it's nice to not just be a one-woman show now. But from a day-to-day standpoint, really the only thing that changes is SEK is behind my name now instead of Stanball Ness. But it's nice because there's additional resources, some additional perspective, learning some, what things that they run into with their school district. So it's a great process that I think will only be able to, add to the value that I can provide the district as the auditor going forward. So that's kind of the change for me, but really no significant change for you. As far as the audit goes, we're in the process of wrapping things up right now. What I'm going to plan to go over, and I'm going to share my screen with you here, is some preliminary, just high-level results of where things stand right now. We are not expecting any significant changes at this point. If for any reason there would be any, journal entry that comes through in the next couple of days that would change something, we'll definitely make sure that you're aware of that, but we're not expecting it at this point. Right now, we're in the process of the statements are going through review. We're rolling forward subsequent events and just kind of wrapping everything up. So as of right now, we are shooting to kind of sign off and finalize things next week. I know our original plan was to present to the board either at the February 1st or the February 16th board meeting. So I know that's something Belinda said we could chat about at this meeting to see what the thought was there as far as if there was a preference on those two meetings. But I don't know if we want to chat about that now, or I can kind of jump into what I have as far as the high level financial information.
I think it would be important to build a little bit of that background of understanding with the high level financial information, and maybe that question that you're posing, we could better answer or respond to it when we understand what's included in an audit then.
Absolutely. Okay, so let me share my screen here. All right. All right, can you see it's a PDF document that says preliminary? Okay. So I really have some snapshots here that I plan to go over. I'm gonna, again, high level, so I'm gonna jump around a little bit, but please, please, if I'm going too fast or if you have any questions, just yell. Just let me know. I know it's always hard to see everyone in the virtual environment. But first, I'm gonna start at your fund level. So fund level is your day-to-day, how you budget. This is taking a look at first the general fund and then also your 2 capital projects fund. So what you have on the screen here is really taking a look at the revenues and expenses, and then what we call other financing sources and uses for the year. And again, this is everything fiscal year end June 30, 2020. So at the very top of the screen here, and I'm going to concentrate on the left-hand column, which is the general fund, we're coming in at just under 63.7 million of revenues, jumping down a little bit at expenditures of just under 62 million of expenditures, which gives us what we call an excess of revenues over expenditures of about 1.9 million. Then we jump to that final section, which is really the other items. Those are other financing sources and uses. And in that area, we really have 2 items: transfers out of the general fund, and then also about $7,000 of proceeds from sale of items. So the total of those items there are about 1.5 million. And I'm just going to zoom in here, make sure this is big enough for you to see. So really what we're looking at from the general fund standpoint is a positive change to the fund balance of just under $400,000. So the general fund was to the good of $388,000 for fiscal year 20. And that's just really taking all of those revenues, expenses, and then those other items into consideration. I'm going to ignore the fund balance piece for the moment. We're going to come to that on the next page. Just to highlight for your capital projects funds, you do have 2 capital projects funds. The one is your capital project reserve fund. This is Fund 32, if you're familiar with the fund numbers. This fund has been around. We also now have a Fund 39, which we're calling that capital projects bond fund. And what's a little wonky about this is you actually see this fund is technically in the negative as of June 30, 2020. And that's just because you had funding come in after year end related to your Series 2020 bond. So some of the expenses started to happen before that. So it's just a timing difference as far as some of the expenses happened before that funding came in. So fiscal year 21 will look definitely a little bit different. But as I said, you had about 479,000 of expenses in that capital projects bond fund and just no revenue related to it for this fiscal year. And then your capital projects reserve fund, total revenue of about 88,000. You had total expenses of just over 1.1 million, but you did have a big transfer in from the general fund. And that's how capital projects reserve fund works. Essentially, we're going to be moving funds from the general fund into capital projects and then using those funds towards those, renovations, acquisitions of property, building projects, etc. So if we take a look at the net change in the capital projects fund, that was a positive $462,000 change for the year. So from a governmental fund standpoint, we take into consideration general fund and capital projects. Food service is on its own. We'll look at that separately. But if we take those funds and kind of mesh them all together, it was really a positive change of about $370,000 for the year on your governmental funds. Again, that's fund level. So we don't have debt on the books as liability. We don't have the pension on the books as a liability. We don't have our fixed assets in the asset section of your fund level. So now I'm actually going to go back a page to the balance sheet of those same funds. Again, this is at June 30, 20. And you can see total assets of the general fund were about 35 million. I always like to point out the breakdown here. The biggest one being this 4.2 million is in Lincoln Benefit Trust reserves. You can't touch that at all. That's all at Lincoln Benefit Trust. The district does record it as an asset because it is your asset, but essentially it's 100% restricted. It can't be, used to pay salaries or anything like that. And then the other big piece here is going to be cash. So you've got about 23 million of cash, and then everything else is the difference is broken down, most of it in receivables, some inventories, prepaid expenses, etc. And then on your other two funds under governmental funds, you've got about 7 million in the bank for the capital projects fund. So total assets of those governmental funds that we just talked about of about 42 million. You then also have some liabilities on the books, accounts payable, anything that was related to the year that was paid subsequent, due to other funds. So this is just going to be items that, you know, were paid by general fund but are owed back to general fund by, you know, food service fund. Those are internal kind of transactions that happen between the different funds. Accrued salaries and benefits is your big one. So there are salaries and benefits that, you know, are related to the year that are not paid until subsequent, or are an accrued liability that would eventually get paid out. So total liabilities of the general fund, just about 7.7 million, or the total of those governmental funds, just about 8.2 million. So that brings us down to deferred inflows of resources. This is a newer item. It's been on your financial statements for probably about 4 or 5 years now, but it used to be called deferred revenue. They then kind of widened the terminology to deferred inflows of resources. And the biggest part in here for your general fund is really taking any receivables and anything that's not considered readily collectible or available, meaning it's not really going to be received in the next year, is not considered a full receivable on the general fund. So we offset it with a deferred inflow of resource here. So this number, this 2 million, really offsets part of your receivable up here. And the biggest portion of that is your taxes. So any taxes, real estate taxes that are owed to the district but are not collected within 60 days of year end are essentially deferred because they're not considered readily available. And there's another item that I'm going to get to that's in relation to that. But essentially, that's what this offset is really putting those receivables into perspective as far as what's actually available to the general fund. The last piece of your balance sheet then is your fund balances. And you've got lots of fund balance categories here. So total fund balance for the general fund is about 25 million. For your capital projects, just under 7 million. And again, we talked about this wonky negative fund balance, and that's just a timing issue as those funds come in here in fiscal year 21. So the meat of this is really your general fund balance. So you take that 25 million and then split up over 5 categories. Non-spendable categories, inventory and prepaid expenses. We can't spend, we can't, you know, use supplies to pay the bills. And if we've already paid expenses for future years, we obviously can't use those funds or that asset to pay for current expenses. So those are called non-spendable. Restricted means it's restricted by an outside party. So here's where that Lincoln Benefit Trust shows as a restricted part of your fund balance. You also see that over here in capital improvements. Per Pennsylvania state code, once something is transferred into a capital projects fund, it cannot be used for any other purpose. So essentially, once it's transferred into capital projects, it must be used for capital means. And essentially, that based on it being the school district code, we're considering that a restricted party. So that's why that fund balance is shown as restricted. The next level down then is committed. Committed usually means there's board approval involved here. Capital improvements. So this is part of the general fund that has been identified to be used in the future for capital improvements. You also have retirement and PSERS needs. So there's going to be future increases for PSERS, for that pension and the other benefits. So that portion has been identified of the general fund balance for future needs and rising costs of PSERS. And then you've also got under assigned your budgetary reserve. So you went into the fiscal year 21 budgeting to use about 4.4 million of fund balance. So we want to make sure that we're showing that at June 30, 2020 as, hey, this has been planned to be used in the next fiscal year. And so that's why it shows as assigned on the financial statements. The remaining piece then is what is considered unassigned, and that's that about 8.1 million there that shows as general fund unassigned fund balance. I'm going to pause. I know I just threw a lot at you in regards to mainly the general fund, but also those 2 capital projects funds, which are all considered governmental funds. Any questions there? Anything I went over too quickly or I missed that you were hoping I'd touch on with the general fund? Before I move to the food service fund, I am going to just jump to a budget versus actual aspect of the financial statement. So this is something that's actually included in your financial statements. It is required under governmental accounting standards. So you'll see here your original and final budgets, the actual amount, and then any variance. So again, just looking at it from a high level, your revenues came in about $550,000 over budget for fiscal year 20. Jumping down to the expenses here, a positive number is a positive variance. So your expenses came in about 2.5 million under budget for fiscal year 20. And then we're going to flip over. There's one more page. That's where we look at those other financing sources and uses. And on this page, we essentially come in about 1.5 million under budget based on transfers. So in total, we had we essentially budgeted for a use of fund balance of about 4.4 million. But as I had shown on that first page, our general fund actually ended up to the good of about 388,000 or just under 400,000. So I'm going to again pause there just to see Belinda, Tom, feel free to jump in here if any background or I'm not sure what conversations there may have been had in this committee as far as budget to actual results, but any questions there, again, just high level.
Thanks, Krista. This is Jason Perrin.
Hey, Jason.
How are you?
Good,
Sorry,
how are you?
I had to jump on late. I had something to deal with.
No problem.
Appreciate the work that your group does for us each year. You know, some of this we expected due to COVID last year. We expected some savings due to COVID, and we were aware through a couple of updates last year that we were seeing some increased tax revenue. We were pretty conservative with how we budgeted that, given people's work situations and things in terms of income tax, those kind of things. So, so this is about what we expected, because we knew that coming into this year we would have some unplanned expenses like increased charter school costs and those kinds of things. So, so this lays it out really cleanly. So I appreciate the work.
Yeah, and one of the items I talked with Belinda and Tom on is it can be confusing because there are some items, and I'm looking at your budgetary reserve and your special and extraordinary items that are in your budget that are somewhat considered for the future. So that's where you're planning ahead as far as trying to space out any capital costs over the future. So that can be a little bit confusing where you're thinking, well, why did you budget 1.75 million and there's nothing there? And that's just because you're trying to spread some of those costs over the years as opposed to trying to have one big tax increase at one time.
Yeah, a lot of that's been going on for years with preparation for large projects like our high school that was recently approved.
Right.
We do have, if you don't mind,
sure.
Krista, please go and also explain the prior period adjustment there, because that will be the first time that we're seeing that. And just so the committee will know when they are looking at the financial statements. And again, this is the first view that they actually were able to see this level. Now, obviously, when we provide it to the board, they'll have their copy. But this is actually the first overview of what had happened and what transpired as the close of the year. But if you could please do me a favor and explain the prior period adjustment, because that is something that is new for us this year, that we've made a kind of conscientious review of our beginning and ending numbers in terms of having to restate a few things.
Absolutely. That was my next one. So you got me in the right order there. So we do have a couple of prior period adjustments that we're flowing through this year. And prior period adjustment means we're taking the beginning fund balance for fiscal year June 30, 20. So essentially the balance that rolled from June 30, 19 to July 1, 19. So we're taking that beginning balance and making some adjustments to that. And the reason we do that is essentially if we're down the road a year later and something comes to light and there's a couple of situations here that says, you know what, that balance probably should have been this now that we know X, Y, Z. What we want to do is make sure that we appropriately make that adjustment to that beginning balance, because you don't want to be hitting your current year activity for something that was related to prior years. So that's really the thought process behind a prior period adjustment. So a couple of items that I'm going to walk through, and I'm first going to start here on the general fund level. Again, this is how you budget, is that fund level. And so what we do have here is a decrease to the beginning fund balance of $927,200. And this page I've actually extracted from my draft financials that we're working through right now. And there's discussion down here of this, but I'm going to walk you through it. So essentially, this is related to receivables, and there's two pieces of these receivables. The first piece, the easier piece to talk through, is about 122,000, I believe. Yep, 122,255 of charter school invoices that were related to a reconciliation of the 2016-2017 year. So talked with Belinda and Tom on this. Belinda did some research because obviously this predates her quite a few years. And please correct me if I misspeak, Belinda, but essentially it came down to there's a reconciliation for the 16-17 year, a change in billing and a change of rates. There were invoices that were sent in June of 2018. So that puts us back 2 years that essentially are now being determined are not collectible. So what we looked at is, those bills were sent of June of 2018. We're now 2 fiscal years past that. And that's where we came to the conclusion they need to be written off, but really they should have been written off at June 30, 19. And that's why we're saying this write-off of those invoices is going against the beginning fund balance as opposed to writing it off as an expense in the fiscal year 20. So that's the first part of it. The second part of it is a receivable from the state related to PlanCon. And PlanCon funding is related to any of those capital projects that you've done over the past couple of years. You get a reimbursement from the state based on, what the type of building is, how it was financed. And there are 2 projects really that are related to this. And one was actually a cash project and the other was a finance project. The PlanCon J form, which essentially, if for anyone who might not be familiar, once you go through that type of project, you actually have to submit several versions of forms to the state where they approve the project, how it's going to be reimbursed, and then you actually get a mini audit of that PlanCon form where we actually audited, yes, these were the expenses related to this project and this project. That gets submitted then to the state, they approve it, and then you essentially get reimbursed, typically based on your debt payments, or if it's a cash project, you get reimbursed a little bit differently. But each year you submit to the state, here's the debt payments that we paid on those issues, the percentage that they're going to pay, you then get a reimbursement towards those projects. So these 2 projects that are kind of outstanding, my understanding is that the state has received the PlanCon J form, they just have not been approved. And I think, Belinda, the response that has been given is the state is working from home. They're not sure when it's going to go through. And for the past couple of years, there has been a lot of delays related to the PlanCon funds. So I don't know if you want to add to that as far as the response that you were given, Belinda, on where this stands.
Sure. So when it initially was filed, the state had said that the PlanCon J needed to be submitted and approved by the state before they would give us a reimbursement percentage on that fund, on those funds that we have, submitted during those PlanCon processes. However, we finally received, I think, May of 2020, we received information that the state had received the J, but because of COVID, everyone was out. And so they were not able to provide us any additional information. We've sent emails asking for further information as to whether we may be in the pipeline of getting that approval of the J so we can apply a percentage, and we have not heard. So we are still in the process of connecting with the state to try to get a timeline. But in the essence of, the audit as well as the timeliness of it, really in looking at this view of it, it does seem like it's a large amount of money. I think we will obtain that level of money, but when is the key? And typically it needs to be within a year or less when you're recording on your financial statements. So there's no guarantee yet if we'll even receive it. We haven't even received a rate yet. So in reviewing all of that history and data, it just made perfect sense that we're going to keep it on the fund level statements. Is that correct, Krista?
Yeah,
But
so you're exactly right. I think at this point, we believe the district is going to receive this money. The problem is we just don't know when. So when we think about it from a general fund standpoint, we really are only recording receivables that are readily available. So usually that 1 year timeline or even less. So if we think about your tax revenues, it's 60 days. So for your tax revenues, if you don't receive it within 60 days, we defer it. So we took the same approach here and I said, you know what, this receivable, we should defer from the prior years because it hasn't been received and you don't know when it's going to be received. So on a fund level, we essentially, it's still in that receivable. And I'm going to jump back to this page just to illustrate this. So that receivable is actually still in this number right here, 3.7 million, due from other governments, due from the state. But we've put an offset now down here in deferred inflows of resources. So part of your taxes are deferred, and now also that PlanCon receivable is deferred, essentially saying it's not readily available. It's not a current resource. So that's the difference there. And that's where up here, you can see, and I'll talk about the government-wide here, but you can see there's a difference between reconciliation of outstanding receivables of $927,000 on the general fund versus up here on our government-wide financial statements, which those are full accrual. Government-wide financial statements are now when we put all of the capital assets on the book, we depreciate them, we put all of your debt liabilities on the book, we put the pension liabilities on the book, we put the other post-employment benefit liabilities on the book. That's when we literally everything is full accrual. And part of the reconciliation from fund level to full accrual, for example, those tax revenues, we remove that defer. So we actually have the tax receivables as a full receivable without any deferment. And so we did the same thing here with that PlanCon receivable. So on the general fund, we've offset it, saying it's not readily available. But in your government-wide financial statements, we remove that and say on a full accrual rate basis, it's a receivable, even if it's not considered to be received within a year. So we're not removing that PlanCon receivable. We think you're going to, we're pretty sure you're going to get it. It's just when, as opposed to the write-off of those charter school invoices, those 100% across the board, that was a write-off. So that has been removed from all parts. So that's kind of the difference there on those two. Before I jump into the two other prior period adjustments, any questions there? Because like Belinda said, that is a little different. And that has not been discussed until today.
Thank you, Krista.
Were a couple of things, and they don't need to be answered now, but just I think important pieces when the audit's presented to the full board. There was something related to anticipating the tax revenues that Belinda did slightly differently than the other schools in the county.
Okay.
Is that in this year, Belinda, or is it in the coming year? I can't remember exactly what it was, but it was.
That will be in the year that we are in right now.
Okay.
When we started budgeting we took the approach that we were middle of the road rather than being drastic of getting our EIT taxes
Okay.
thereof. So we did not deduct our real estate taxes based upon what the other counties were considering at that point in time. And good thing we didn't, because they didn't nearly hit those targets to start with. So we will likely see a little bit change in revenue to the plus again as we close this year, end of June. But no, you're correct, Carrie. That was this fiscal year and not 1920.
So that question plus the next two are tied to that increase in revenues. CARES Act is separate or included in this when you're thinking about possible reasons for the increase of revenue, CARES Act funding?
That's a great question. The CARES Act money, the first round, the ESSER 1, really. When they first came out with the revenue, it is only recognized up until the expenses that were incurred through June 30th. So we had approximately, if I remember correctly, it was about 150,000. It was mostly computers at that particular point in time. So we've only recognized about that much revenue in terms of the ESSER money.
Okay.
Yeah, I see 142,600, I think, is what was recognized in fiscal year 20, which would be unbudgeted revenue.
Okay.
Yes.
So not a significant amount. It's, you know, it's notable amount, but not significant. It will be in the next iteration of the CARES Act funding that is even larger anticipated than what the first iteration was. Another related revenue question, you were referring to charter school invoices that are written off. So these were charter school invoices invoiced to Gettysburg that were not needed to be paid. Am I understanding that correctly? Or can you explain that, please?
It's revenue. So this was invoices that Gettysburg sent to other schools to be paid. And Belinda, I'll let you jump in there on the details because I wasn't a part of that conversation.
So what I understand from the history on this is that there was a rate change. And so how a rate change occurs is it's on a state form called PDE 363, which is a charter school reconciliation form. And so there was a rate change on that form, which resulted in the charters more or less owing Gettysburg money.
Okay.
And typically underneath the charter school law, you have about a year to collect. And for whatever reason, change in staff and in the business office with secretaries and so forth, that the follow through wasn't necessarily there, and continuation of sending statements, sending additional invoices to them, to the likelihood now that those charters will not pay. I mean, we have a hard time just keeping on top of them as it is with the rates, you know, to make sure that they're billing on the appropriate rates and providing us the necessary documentation. But it really results in a time that there was a rate change on those forms, which resulted in that the charters would owe the district rather than the district would owe the charters.
Okay. So some that would have been collected would not be reflected in this audit's revenue, if I'm understanding correctly. What's reflected in this year's audit are those that were not collected, but now can be considered, what did you refer to it? It's a loss of some sort, but there's a different, it's not just a negative number. It's something else, what you referred to it.
Yeah, so because of, like Belinda said, essentially you'd be collecting those within a year. That's where we sat here and said, okay, the invoices were sent, I think it was June 25th, 2018. So a year actually takes us to June 30, 19. So that's where we looked at it and said, and I always hate to throw this out, 122,000 is not material from an audit standpoint. 122,000 is material to all of us. I totally get that. From an audit standpoint, 122,000 is not considered material. So if Belinda said, you know what, I just want to write it off and hit the expenses for fiscal year 20, I would have said, okay, that's fine. But we talked through it and we said, what's the appropriate recording of this? And really, it should have been written off at June 30, 19. That's why we did it as a prior period adjustment. So it does not impact the revenues or the expenses of fiscal year 20 at all. We are essentially writing off that receivable at the beginning of this fiscal year like it wasn't there. That's how we handled it. So there's actually no impact on our current year transactions by doing it that way. And we have to obviously document that it's okay to do that. And based on that 1 year collection, we think it really should have been written off at June 30, 19.
So the impact most likely that comes out of that is that there'll be changes in processes within the business office that Belinda oversees to make sure that invoices continue to be sent and collected in a timely fashion.
Yeah, and we looked at that actually and what's remaining on the receivables, and everything that's pretty much on there is within that year time frame. Yeah.
Thank you for clarifying.
So the other piece I have here, and I'm trying to be cognizant of time, but I know I have a lot of just kind of different information to go through this year. 2 other prior period adjustments. Now, these prior period adjustments only affect those government-wide financial statements. So not the general fund. This is when we're going full accrual. And those two adjustments, one is related to the capital assets. So that's all of your property, plant, and equipment. And essentially the school district had industrial appraisal, a third party, come in and do a recount of all of the district's assets. And remind me, was that 10 years or so ago that was done, or was it more than that?
It was 10 years.
10 years. So industrial appraisal came in, the district kind of gives them the information as far as here's what we have. They go through and kind of recount and reassess everything up and come up with an adjusted value based on cost. So it's not like they're doing an appraised value for our purposes. So based on that, there was an adjustment to the cost of the assets and the accumulated depreciation. And so that resulted in a decrease of, that's that 1,482,145 on the governmental funds, and then 266,000 on the business type activities, which that's your food service fund. So in total, there was a decrease of the fixed assets or capital assets of about 1.7 million. And that was based on the reevaluation of all of the property, plant, and equipment of the district and truing it up to industrial appraisals report. However, the district did reconcile and make sure that they were in agreement with the final result of the report that was given to them. So it wasn't like management just obtained industrial appraisals report and said, okay, we're going to make an adjustment. There was a reconciliation process to make sure that that entry was appropriate. I don't know, Belinda, Tom, anything you want to jump in on there that I might have missed? Okay, and then the last one is related to your OPEB liability. So this is other post-employment benefits. So in addition to pension, there are medical benefits that are received in retirement. So the district has had its OPEB plan, its own standalone plan on the financial statements, but this was to add the OPEB plan under PCERS to the financial statement. So again, it's a prior period adjustment. It's adding it to the beginning balance, essentially getting it on there as far as if it would have been on last year. So now you've got your PCERS pension liability, your district OPEB plan liability, and now the PCERS OPEB plan liability on there. So at the end of the day, again, this is full accrual. These entries do not hit the general fund. These are those government-wide financial statements that essentially say, if the world ended and the district closed tomorrow and you had to pay out all of your liabilities, that's the amount that's on there. So that was to add that other, to add that plan on there. So definitely something that we don't want to not talk about, but again, it does not impact the general fund. It is really a non-cash, full accrual accounting item. Any questions there on those items? Okay, I have one more item that I was going to go through here, and let me pull that up. I just wanted to I didn't want to forget about the food service fund. So real quick, just to highlight the food service fund for the fiscal year, you had operating revenues, which are going to be all of your charges, of about 455,000. All of your expenses then, operating expenses of about 1.55 million. So you come up with an operating loss of just under 1.1 million. But that's because all of this federal and state subsidies that come in, plus the donated food and earnings on investments, are considered non-operating items. So they go down here under their own special category. So at the end of the day, when we take all of that into consideration, we were break even, about $2,300 excess expenses or a decrease in net position, but essentially the food service fund really broke even, which is what you expect to see for fiscal year 20. And I'll just back up so you see the balance sheet there. You can see assets of the food service fund. You've got cash and cash equivalents just under 2 million. You've got some receivables. The different thing about the food service fund is this is full accrual no matter what. So we do include the fixed assets related to the food service fund. All of those liabilities like pension and OPEB are on here. And then you've got your other liabilities, accounts payable due to other funds, accrued salaries. But essentially that takes us down to total net position or fund balance of the food service fund of about 840,000. So I don't want to forget about food service fund. I wanted to make sure I was able to quickly run through that there. So I know I threw a lot at you there. Any other questions? Again, I just kind of wanted to give you a preliminary idea of where things are ending up. I'm not expecting any significant changes. Like I said, we're going through our review process and rolling forward subsequent events. But if something for some reason would come up that significantly changes what I'm showing you here today, I'll make sure everyone's aware of that before we would present the full audit report to the board.
Belinda, you were looking at the second meeting in February for the full audit for the board. Is that correct?
Yeah, so I actually posed that question earlier. I can be flexible. So either February 1st or I think it's February 16th, whichever you prefer. We're looking to get things wrapped up and finalized next week. So I think we could meet that February 1st deadline, but if you prefer to just do the 16th, I can do that as well, whatever you prefer.
Yeah, I think it's a significantly lengthy report. So as long as we can send it out and have the board have plenty of time to look through it, so that when it's on the agenda and you're there to answer questions and they vote to approve it, that they've had enough time to look through it. That's the only reason I mentioned the second meeting in February.
I agree. And so I think probably going with the 16th would be the best. That way we can get that final document out and there'd be time to review. I know everyone's going to read it front to back page and study it and have lots of questions.
Krista, the best
Now,
case
I
scenario.
do read it.
So Krista, if we could have it available to put it on as kind of like informational for the February 1st, and then we can then have you come and present and take action on the 16th. That way they have at least about 2 weeks
Absolutely.
then to look at that report. If that's something that's doable, then I would need that report probably the Thursday before February 1st, if that's.
So that's
feasible.
next Thursday.
Is that possible?
Let's see. Let's see if we can do that. If for some reason we can't, can we be a little bit flexible on a couple extra days just to get them a final PDF?
Yeah, we could always email it to the board as information as well, even if it's not information item on the agenda.
Okay, because I wouldn't be at the February 1st meeting anyways, so any questions would come up at the 16th meeting. Yeah. Okay.
Thank you. Thank you again for review.
Oh, absolutely. And I will say, if there's anything in particular that anyone on the committee wants me to, wants to make sure that I do go over and review at the board meeting, please let me know. For anyone who was at, my presentation the past couple of years, I first start off by reminding everyone how an audit works, what goes into that process. And then I'll do some kind of high level review similar to what I did here today. What I usually do though is I put together charts so it's all kind of nice and neat. We're not flipping back and forth. So I try to make it as streamlined as possible for that presentation.
You've always done a very nice presentation. I anticipate that the questions will be more along the lines of even what I was asking related to revenue, and they may be deferred to Belinda to answer that. But there, at the end of the school year, there was curiosity about cost savings that the district was anticipating or realizing. And I think the audit and some of the excess revenue may prompt some more questions and curiosities about the difference between projected and actual.
Absolutely. Okay.
Thanks,
This is Sylvan Hershey. I want to thank you for making your summary one that I could understand. Belinda, thanks for making it relative to Gettysburg. And Carrie, thanks for asking most of the questions I was going to ask, but I'm glad I didn't have to.
That's always my biggest challenge, is trying to take accounting speak and portray it in a non-accounting way, which I try really hard to do, but sometimes it is difficult.
I thought you did a great job.
All right, well, I know you've got other items on the agenda. I don't know if that's a good or a bad thing that I took up more time than I was supposed to, but I will jump off here. I'll stop sharing my screen. Thank you everyone for your time. I'll see you in a couple of weeks, and Belinda and Tom, I'll be in touch over the next couple of days as we're wrapping stuff up.
Great. Thank you very much.
All right, see you everyone.
So next on the agenda is the food service project bid review for the high school kitchen.
Yes, Andrew, if you're able to show that bid cut sheet, I'd appreciate it. Before go into this here, I did share on the agenda at our board meeting is about the equipment upgrade. Basically, I wanted to give an overview. While I provided the information, I want to kind of give an overview for the Facility Finance Committee, because we will ask for the board to approve the low bid on this project. So in essence, the food service fund, Mrs. Weichert, Mr. Fortin, and also I believe Mr. Crosby was involved a bit. And I believe also Mr. Huffman was also with us too along the way. So we started planning probably, well, let me back up for a second. I believe Mrs. Weichert and the food service director, she was planning to set funds aside nearly 5+ years ago to look at equipment upgrades at the high school. And so what COVID hit, of course, and our planning had changed slightly, but we were planning since early May to review what the needs were. We knew we had approximately, we set a budget about $225,000 to look at equipment upgrades for the high school. And we didn't want to exceed that. So when we were going into looking at exactly what we wanted to do at the high school, we wanted to have it somewhat piecemealed to say, here is the base bid. This is the things that we absolutely wanted done. And then here are things that if we have the availability and it makes sense and the price is good, then we will, do that as long as we can stay within or below our set budget. And we withheld that number very early on with the architects and the engineers, only because we didn't want to set the threshold very, very high in their terms. So we kind of, told them, here's what we anticipate doing, sort of give us an idea of what it would be. So we processed this and we went to developed a bid. We put that bid out on, advertised it once a week for 3 weeks. It went November 19th, the 25th, and December 3rd. And we actually opened the bids up on December 22nd, right before the holiday. And so this is the actual bid cut sheet that we review. And of course, we have not approved the bid yet, but we are going to be bringing it before the board. So hopefully our recommendation is that the board will approve the bid. So as it stands right now, you can see the base bids there, how they came in, as well as all the alternates, and then the value of each of the alternates. So we kind of wanted a so-called a cafeteria style plan of selection. This is what we like to do. Can we do this or not? And what's the price of it? So that way we can determine what it is that we want to do or not to do. And so as such, even with many of the alternates there that are listed, the lowest bidder, of course, is 11,400 Inc., which formerly in another life, I believe, is Clark Company. And they have done work for us before in the middle school, I believe that is, Tom, if that's correct. And so they have very good quality vendor, good processes to the replacement of equipment, and the equipment needs are high quality. So we do not anticipate a problem or any concern with the bids and the fluctuation of the bids, because we did ask the architect to go back and check with the vendors to make sure that some of these prices were accurately reflected, and especially in some of the alternates, because there were some swings there. And so we did that, and therefore in reviewing that is what we created the informational piece before the board on the 19th. So if anyone has any questions, if you take a look at the bid cut sheet and have any questions, you can get back to us. But we would like to move forward with getting the approval. We have 60 days. Since bid opening was December 22nd, we actually have 60 days. But of course, if we can have a decision here in February, we will be good. And of course, if there's any questions, you can definitely reach out to us and ask. But this is pretty much, the food service department does have a 5-year plan that they continue to update. And they also make changes along the way too, if equipment starts to fail in each one of the facilities. But this has been a 20-year since the high school was done, and looking at the process of getting some of the equipment updated and the serving lines and so forth, that nature. Are there any questions maybe?
So it was information at the last meeting, so we'd be looking at February 2nd for action. Is that correct, Linda?
That's correct, yes. And the recommendation would be to approve 11,400 as the lowest responsible bidder for the food service equipment upgrade.
And with that bid, it's the base bid plus what's listed there horizontally, Alt 1 all the way through Alt 12 as what would be approved. Is that how you're communicating this, or is it?
Sure.
The base bid?
What we've communicated in the informational piece, it would be the base bid plus everything except for alternate 1. It was a choice that not to do and not to proceed with alternate 1. So the total price would come in at $205,260.
And what was that alternate 1? It's hard to read on the screen here. Sorry.
The first one, it was actually flatware holders.
Oh.
So Mrs. Weichert said she could find another, do something differently to rather than spending the $770 for flatware holders at the high school. That was really her preference.
Okay. Thank you.
Mm-hmm.
Anybody else have questions?
Thank you. And Tom, if you want to take it away for the review of the capital improvement program.
Yeah, first, I think we were going to pull up the outstanding list there. That's just to let everybody know that these items from prior years are still outstanding, and we're working through. COVID definitely played a part in delaying some of these things. You can see the status, but I can go down through them quick if you want. Basically, from the 18-19 year, there was an administration building project for unit ventilator replacement, which was, if you recall, we were going to put the HVAC up into the ceiling to get the unit ventilators to not be so noisy, and it makes the air cooler and hotter, quicker and better, more efficiently, that sort of thing. The next one was sealant repair, repointing, precasting, and cleaning at Eisenhower. And I believe originally we were thinking that would be done with the roofing project that happened over there, but that didn't work out. So actually, I think I had a conversation recently with Jim that we thought maybe we could actually do that. We'd have to buy the materials and stuff, but we might be able to do that with our own staff, possibly. So we're going to look into that. From 1920, of course, that's the COVID year. So there's quite a few things on there. And you can see that some were moved from prior years as well. Anything that has to do with like student vans, we kind of have been putting on hold a little bit until we know we're back to normal as far as school and stuff. So we haven't really pushed to try to replace those vans so that they can just sit there, type of thing. And so that first one we have on hold there. Out at Franklin Township, there's a project to replace some exterior windows, 10 classrooms. James Gettys, there's rooftop ductwork insulation that needs to be done. James Gettys, there's parking lot expansion project that we actually did a little bit of that to get the year open because of COVID and making sure that we didn't have cars out on Bigville Road, which was a safety issue. So the township actually allowed us to do that little piece that we were able to do within below quoting limits. I think even it wasn't a lot of money to just quick do that, but that project is still out there. We're waiting for some legal work, but we'll be going out to bid for the whole project, and then we'll be coming back to the board, and the board will have to decide if they want to move forward with that or not, depending on what the cost comes back, obviously. The next one was another sealant repair, repointing, precast cleaning at James Gettys. And Lincoln, there's the replace the lights with high efficiency fixtures. And the gym wall divider, you know that the board just approved that. So we've already ordered that and should be done coming up soon, I would think. And Lincoln, there's okay, so Lincoln, this is that project I know we've talked about many times that has to do with, there's a bridge behind the building, there's a retaining wall sort of behind and around the building there. And so that all still needs to be done. It's a complicated project, so we haven't gotten the final how we're going to go about getting that completed. And so we're still working on that, obviously. The last one there is replace pole lights with high efficiency lighting, and that's also in progress. And then from the current year, we still have obviously the vans we put on hold. We do need to get there's a maintenance van that we do need to replace because it's not going to pass inspection, I don't believe, because of rust and some other issues. There's a mower that needs to be replaced. The admin building thing there really goes along with the James Gettys parking loop. Like, we're basically going to combine those two. So whenever we get the bid back for the James Gettys parking lot and the additional parking at the admin building, we would also use this money that was set aside for that project towards that. And then Franklin Township, there's a domestic water line replacement that needs to be done. And I think that's more urgent. That's why it was moved up from 22, 23. Looks like we're waiting for a quote for that. There's a foundation waterproofing issue, I know, at the northern side of the building that probably needs to be done very soon as well to make sure that gets straightened out. There's some water leaking into the basement if you've ever been up there. And then energy management controllers for James Gettys and carpet at Lincoln. And that's already being scheduled, I believe. And that'll have to go to the board. I don't think we've gone to the board yet with any information on that. And then there's a project that we were going to try to conclude it in the high school HVAC project, but the preliminary estimates we got back from them were really high. So we decided to, this project was already on the books to keep it separate. So there's a quote that we're waiting for that project. And as we get this information in, then we'll come to the board with these projects. They were all in the book, like I'm going to go over next. They were all in those books from previous years, and it's just with COVID and some other issues, they're just outstanding. And I thought it would be smart to make sure the board was aware of these items that are still outstanding.
Hey, Tom, do I have the right document? Because I'm not seeing anything. The last part of what you were talking about, I don't have.
Which one? What was that?
Well, this is only one page and there's nothing listed for.
The detail on the current year.
Right.
For 2021?
Yeah.
I think the stuff's above it.
Yeah.
Yeah, it's above the year. I'm sorry. So the first block is 18-19, the second block's 19-20, and the third block is 2021, which is the current year.
Oh, I see. Okay.
Sorry. And I went through that quickly on purpose. So if you have any questions, Jim can also give more detail about things.
I'm here if you need something.
Yeah.
Yeah, when you were saying student van, I was already down here. So
Well,
that was my fault.
Right. There's a student van on 1920 and 2021. There's two.
Okay, my apologies.
That's all right. Anybody have any questions about that list? I just want to make sure the board was aware of those issues that are still outstanding. So you will see them eventually come before you as we work our way through them.
Right. So they were approved once as part of the 5-year plan, and they'll be approved again as the action the item actually comes up for.
Now, if it's less than the 19,100 or something like that, then we just move forward with it. But if it's the 19,100, then we bring it back to the board for their approval.
Correct. Thanks.
And just to clarify, Tom, you're better off because the bid process is 21-3, so 19,000 is up now. So of course we'll use vendors that are through state contract and so forth, but we've got a little bit higher of a threshold just since January.
Now, this next thing with the draft review of the the 2021-22 through 2025-26 capital improvement program 5-year plan booklet. I'll just take you through the booklet quick to remind you what it is. And then I can go through the list on the 2021-22 items that we have listed there. And that's where the more detail in the booklet is. And this booklet did get emailed out to everybody. I know it was recently, but so you should have it in your email. The first, obviously the cover page, and then it goes into a table of contents and an introduction. And then there's a, on page 2 and 3, there's a kind of an overview of the process that we established way back when this started. And I mean, I can go through that if anybody wants me to, but I think it hasn't changed. And then the
Tom,
next.
Tom, I have a question for you.
Sure.
My printer is on its last leg, and I'm an old timer, and I like having hard copies. Do you have any extra hard copies in your office?
I do, actually. I printed extra copies knowing that we weren't meeting in person, but I figured that somebody was going to need a hard copy. So yeah,
Okay,
we can either mail it, or next time you're here, I can give it to you, or however you want to do that.
Yeah.
Well, actually,
go ahead.
It will be on the board for, well, if the committee agrees, we would put it on the board as an information item, I think, for February 1st. And then we would probably give everybody a hard copy at that meeting.
Okay.
But if you want it before then, we can get you.
That'd be good. I can use the one you sent us up until then, and when I scribbling on 22.
I can't hear what Sylvan's saying.
Oh, I'm sorry. Can you hear me now?
Yeah.
Okay. Yeah, no, your timing, the way you just explained things is fine. I just like having a hard copy, and the timing is there because I like to scribble notes on it. And it's tough to do that on my computer screen.
Sure.
Thanks.
The next 2 pages are the actual sort of list that I'll go over the first year after we kind of go through this. But it starts out with the 5 years of list on the, Andrew, that's the next page. There you go. So it starts out with the 21, 22, and then it goes down 22, 23, 23, 24, 24, 25, and then 25, 26 goes on the next page. And that's like the 5 years. That's sort of the plan. Then after the 5 years, there's a looking ahead 10 years, some items that are just listed there of things that we need to think about. And then down below that is a section that really talks about the big, go back a little bit, Andrew. The pink section there is really the like FIP type of things that we might need to borrow for, or we've already included in borrowing for, and we call it FIP. And then so those 2 pages really cover the whole 5-year plan plus looking ahead plus the FIP stuff. Then the next pages from 6 to 12, I think, are the actual go into the detail for the current year's list, the 21-22 list. And then after that, page 13 through 19 is just data on each of the district buildings. That's interesting information. So Andrew, we can go back to page 6 if you want, and just quick go through the first, page 6 of the actual document, not the PDF, I'm sorry. So there you go, it's page 8, sorry. The first item on the list is replacing a student minivan. Obviously, it's going to fall into that same category with COVID. If we're not back to school full time, we might wait a little bit. However, this one I think is used for a specific purpose. So if that specific purpose is continuing right now, then we probably will need to get it replaced early in the year next year, if we can. Anybody have any questions on that one? And it's basically,
I just wanted to make sure I asked while we were on the topic. This is Amy
Sure.
Beth Hodges.
Yep.
What do you think the specific purpose is? Do you know offhand if it's
Yeah,
for handicapped accessible or?
Yeah, basically it says right there, it's for the district's
Yeah.
life skills program at the high school. So I think they take students to various local businesses and they gain life experiences not found in the traditional classroom setting. So the van is been in service since 2001 and it has about 85,000 miles on it. And I believe it's becoming more of a needs more service regularly because it breaks down or has issues type of thing. So it's basically, we've had it almost 20 years.
You can soon put classic tags on it. With,
Yeah,
with,
that vehicle was at the garage when I was getting my last oil change, actually. It was there.
With special ed, it's required that by law that students are have a transition plan to work and life beyond high school, and part of that is learning on the job training skills. So you might see like some of the student, and they may not be Gettysburg students, but one example of this is you might see students at the giant grocery store who bag groceries. A lot of those students may be in a life skill type classroom and they're learning how to function on the job. There's some other programs, Project Surge and others in the area, but they need transportation to get to the work sites.
Any other questions on the van? Okay, the next one is.
Well, do you mind if I ask, are there any vehicles that we would have that would be similar that could possibly be used? I mean, this obviously does look like it's an aged vehicle, but are there any that could be used and maybe we wouldn't have to replace this?
I don't know if I have a good answer for that off the top of my head. I mean, all the vehicles that we have are used for
If I can jump in here for a minute, Tom, as long as COVID remains in effect, yeah, we have other vehicles that could be used for this purpose. Whenever things get back to normal, none of our vans sit long enough and are readily available for this particular program when they need to be. And that's why we have a dedicated van specifically for them. So the real answer is that as long as COVID is still around and our students are traveling, yeah, we have something to give them. But whenever things return to normal, this van becomes critical for that program.
I'm just hoping that maybe this could be something that if we are still in the predicament that we're in right now, that we could put on hold. And I thought that just having that discussion now would be appropriate time. So thank you for answering my questions.
You're welcome.
The next item is roof replacement on the district maintenance shop. It's about 20 years old. I would have to defer to Jim if they're having actual leakage or if they're just being preventative and making sure that it gets replaced.
We are having some minor leak issues at this point. The roof is starting to become rusty, and that's why we have it on for replacement.
So is the consideration to replace it with a product that has a longer lifespan than 20 years? Like standing seam metal?
Actually, the product that we have designated here is 40-year lifespan.
Oh.
So yes.
And unless anybody else has any questions about that, we can move on. The next one is also a roof, and that's on the warehouse. And basically, that's a slate roof that was put on, I believe, in 1964, the original. And I know, just even looking at it, you can see cracks and pieces of slate fall off and those sort of things. So it's also being recommended with the same product, I believe, which would be a 40-year roof on that as well. And that one is really consequential because there's products and equipment in that particular warehouse that if it gets damaged, that would be impactful to programs and those sorts of things. And if we don't have any questions on that one, we go to the next one, which is upgrading the energy management system controller in the admin building. And I guarantee Jim could probably give you better information on that one than me, if you want
Yeah,
to. Jim.
one of the issues that we have and have had throughout the district is that, you know, as you approach the 20-year mark, and in some cases even earlier, 15 to 20-year mark on these electronics, they become outdated. Parts are hard to get, and we are at that point with both James Gettys and actually the administration building. So not only are we looking at the James Gettys building, but we're looking at the administration building, and we're also considering and in negotiations with Siemens to try to make this a campus-wide upgrade and not just an individual building upgrade. And we think there'll be some financial benefit to that.
The next item is accessible restroom addition at James Gettys. James Gettys has currently a really terrible situation with ADA accessible bathroom. So we came up with this idea, basically Wayne and Jim came up with an idea of being able to section out a piece of a maintenance area, which is the boiler room essentially, but it goes right off of a hallway and it's near plumbing. So for a reasonable cost, we can create an ADA accessible bathroom that can be used by staff and students that need that or whatever. And it's really a high priority. That I'm sure that as soon as as soon as we can, we're going to move forward with this particular project. And Jim, you may have more information than I do about that as well.
We, as a district, we are really fortunate that no one has complained because James Gettys does not have any ADA accessible restrooms at this point.
And are there currently students who would require an ADA accessible bathroom?
Unfortunately, I believe that's correct. I think
there are at least one that I'm aware of.
Yeah.
And so usually in a building, you see this at least in the nurses area, because sometimes there might be assistance needed with toileting or whatnot. It is unfortunate that it does not have any right now.
Yeah, they're definitely, I don't know if you recall that how many years ago, Crabtree Rohrball did a sort of a renovation project for James Gettys, and the board, we decided not to do it or whatever at the time. But one of the things in there was to make the nurses suite ADA accessible and so on and so forth. To do that, like without doing a more complete renovation would be very difficult. So this was an idea to be able to do it within the walls of what we have and still address, I think it's a pretty tricky situation that's happening right now on how they accomplish what they need to accomplish. And so this would be a really a better way to handle it anyways, and get an ADA bathroom in the school.
Thank you for bringing this forward. This is Amy Beth. So this was not aware of. None of my children went to this particular school, but I'm surprised that we didn't have one. And I would think that this would be one of our first priorities, especially with the design that you were just talking about. Thank you very much for bringing this to the group. I was unaware that this was something that that was, so lacking within that school. And I would definitely be apt to push this along. So thank you.
Okay, thank you. The next item is the also at James Gettys. The cabinetry is the same cabinetry that was there when I went to school at James Gettys many years ago. So it's original to the building. I think it was 1968 or 69 when the building was built. And I think they might have fixed things over time if it needed to be, but overall, generally, everything is pretty worn and torn essentially. So what the project would be is more of just refinishing what's there without having to replace anything. So it's sort of a cheaper alternative than actually replacing all of the cabinetry. So I believe that Jim and Wayne decided this would be the best approach to take to kind of upgrade that stuff. And I'm certainly, if we needed to, we certainly could go get, a tour of some of the stuff and how some of it looks pretty bad. And like I said, it's the original from 1969 or 68.
So you're talking more about the doors and hinges and handles, not necessarily the structure that's within that, frames out the cabinet, or both?
Actually, what we have going on is that, the particular areas that are involved are areas that have like first grade and kindergarten rooms that have sinks. And through the years of splashing water on the countertops, the water's gotten under the Formica. The countertops are going to be replaced as part of this process. And then water that has run down over the face of the doors, sand, revarnish, make things look a little better. There's actually very little structural damage to the cabinetry, which is why we elected not to do a wholesale change out, only to do what we needed to that was necessary in order to make things serviceable.
Thank you.
May I ask, guys, so I'm looking at the pictures. This is Amy Beth, excuse me. Are these 3 separate sinks?
Yes, 3 separate areas.
All right. So, and you're saying, just because I have never gone and actually felt these and opened them or anything, but they're structurally fairly sound, and you're just really talking about really fixing them up a little bit, but it is 3 total.
No, it's a number of rooms. It is not just these 3.
Okay.
There's probably, I don't know, I didn't really count, but there's probably a dozen or more rooms that are.
Really?
Yeah.
Okay.
Yeah.
Okay.
Because again, it's the whole building is, none of the cabinetry was ever replaced. Like there was a previous HVAC renovation, I think in 1995 or something, and they elected at that time not to do anything with the cabinetry. So it's all the original cabinetry that was in the building since, again, 1969 or 68.
Yeah, it looks a little bit vintage.
Just a little dated.
Okay, and then the next item is just obviously the high school roof. The board's well aware of where we are with that. It's actually completed, to be honest. But originally, there was an original cost to that roof that we had on the plan. And then, of course, over time, there was another part of the roof that had been damaged, and the board set aside some money. And then insurance paid recently some more money. So there's still an amount that still needed to be on the plan to make sure that the funding was complete for that. And so that's why this item is on there.
The insurance payment probably didn't even cover all the water damage in into like the auditorium and things last year, that cleanup mess. It's amazing.
Actually, Jim would have to clarify this, but I think that insurance actually did cover the interior stuff. It was the roof that they actually didn't cover the whole thing. They only covered the part, like some percentage of the auditorium roof that was damaged.
We were very fortunate with our insurance company. They paid virtually everything in the auditorium, less the $5,000 deductible. And a little bit less of the roof replacement on the auditorium than what we were expecting or what we were hoping. But all in all, they treated us very well.
Good.
So that's it for the 21, 22 sort of list of items.
So Tom, with this document, we would it would be an information item on February 2nd, and we'll make hard copies along with having them obviously online for the board agenda for the board. We can bring hard copies for each of the board members for that meeting as well. That way they have them for a couple of weeks prior to the action item on the following meeting.
Sounds good. And I think February 1st is the board meeting, I think.
I'm sorry, I probably just misspoke on the date.
That's all right.
and this may be a newbie question, but are these, when these come to us on the board, will they be separated, or will we need to request them to be separated if that be the case?
So generally, like since I've been here, and this process was in place when I got here, I think that Wayne worked with Tom and his department on kind of creating these booklets so that people could, so that the items were a little bit more easily understood. So what's been done the past several years, at least since I've been here, is that that their department works together just because they're aware of the needs kind of district wide. They put the items that they see as the highest need for next year's school year as kind of a package. In the past, the board has approved the package, but then whenever the work is actually being done, the item comes back as an individual action item to actually approve the work before it's done.
So the 5-year
For
plan
example, oh, go ahead.
is a way for us to know what are higher priorities right now, what are the recommendations from the staff who are working in those areas. And it is continuously refined. Even though there's an action item to approve the 5-year plan, it is not approving all the items on the 5-year plan. It is saying that we're aware of them and that these are areas that they will continue to gather information, continue to report about, and we would see them as later action items as they are moved around. Like even that explanation of the van with COVID right now, they may make a decision that it's not going to come to an action item for this year's purchase, but it may be able to be moved down again. That was a fairly easy way to see how there's still movement of items, and they will individually be brought up to the board for approval, but it's more of to keep us aware and keep us informed, and to have relevant and informed conversations as we proceed throughout budget processes and approval of capital items.
And
Or
the,
reduction of capital items.
and the only item that would move forward sort of without the board, I guess, would be as if it's less than 20,100 or whatever Belinda said was the new bid threshold. But like, for example, that van, it wouldn't be able to move forward without us coming back to the board.
And that was the lowest priced item, wasn't it?
I think there's a roof that's lower on the maintenance building that would actually be able to move forward without. So if the board said we don't want that roof replaced for some reason, then that would be appropriate to, I guess, make sure that everybody knew that before you approve the plan.
I really appreciate it, because as a new board member, that was not as clear as what you guys just stated. And I appreciate it tremendously, because of course we're all trying to do our best to make sure that we're as diligent and trying to find out the information. And I just want to thank you. Thank you, Carrie. That was actually a really good point with the van. And I appreciated the dialogue so that I have a better understanding. Thank you.
So Carrie, if we recap kind of the meeting, we have the audit, which will get the information out to the board, and then she will come and do her presentation the second meeting in February. The board will approve the audit at that meeting, and then we have the cafeteria items that were information at the last board meeting. They would be action next board meeting. And then this booklet would be information on February 1st and would come back for action on the 16th. And we'll make sure that we have hard copies for board members at the meeting, along with the electronic copies. So I think I kind of encapsulated most.
I would agree. Anyone else think that there was some part of that might need to be further added? Like, for example, I believe Dr. Perrin is saying that the audit might come out in a Friday update as an attachment as opposed to being on the board as a agenda as an information item, depending on the date it's released back to the district.
Right, because it's still a draft. It's still a draft until the board approves it.
Okay. Any thing else that needs to be to discuss today? Let's pause a moment for that.
No, just thanks Belinda and Tom, and it was interesting watching them go into the normal fiscal audit for the fiscal year on the tails of a PDE, audit, which randomly occurred during a COVID year. So they won't state it, but there was some heavy lifting involved. So I appreciate that, and obviously appreciate Jim stepping up and helping with the facilities items.
Yes, thank you, Jim.
You're welcome. Please feel free to reach out if you have any questions.
Thank you. Okay, very good. I believe that's all of our items then, and we can wrap this up. Thank you all for your time today. And the third Thursday of February would be our next meeting.
Right. Thanks, Kara.
Yeah.
Thank you.
Thank you.
Thank you.